what if we want to target structure for a significant area? Place your target at the recent structure. So we have take profit. We want to be careful here. We don't want to be just, at least in my opinion here on this particular strategy,
Hello everyone, LDR from Flat on X, and welcome to our first episode of our free course. Here at Flat on X, we've decided to share our free material to give you guys an edge over the market. Most of the information that we're going to be sharing with you guys is most likely going to be resold into different courses and different where people are going to be actually profiting from this. So I highly suggest you take this information into consideration. The same thing we'll be teaching you guys is the same thing we teach our members in our mentorship. However, we spend a lot more time refining each aspect in our mentorship. So before we even start to understand how we can trade the market, we first need to understand how not to trade the market. And I think that's very important because as a trader, as a new trader, the first thing that you see is most likely going to be the basic things. And the basic things are going to be the things that really ruin you, because these are the things that are put there on for a reason, just to manipulate you. And to kind of put things into perspective, we've drawn this out where we can show you how big Forex is. Before we can even start trading, we need to realize how big of an ocean we're in. Now we need to do this just to realize how small of a fish we are in a big ocean. No matter how much money we have or we think we have in our account, we actually cannot move with price. And you kind of have to ask yourself, why is all those things are so easily accessible? Why are those, support and resistance, trend lines, moving averages, all those basic things? Why is it so accessible for a trader to get into that? And you also have to ask yourself, do you really think those big banks don't know about support and resistance? So there is a very big money circle, and we're literally we can't even directly get the money. We can't even directly have a liquidity. We have to go through a third party, which is a broker, for us to gain the liquidity. So we actually have a middleman between us and the medium banks for us to get access to the big pool of liquidity. So this is how small we are. We can't even directly just get liquidity. So for you to think that you can move price or have any type of influence on price, you're out of your mind. So once you understand that there is big suits and ties and there is a lot of money involved, then all this goofy ass shit that you see here doesn't work. All those things are put there to be manipulated by the banks. The banks purposely do those patterns to manipulate retail traders that are taught to buy in or sell into those patterns. Smart money is a very unique way of trading that combines institutional, ideologies into a very small strategy that really refines price action. And part of support and resistance is the motivation for smart money. Support and resistance was the reason why smart money was made, because smart money is the opposite of your ordinary support and resistance. A regular way of looking at the market is obviously going to be by support and resistance, where you just simply put in your key level or historical level and you just see how price react to this area. But you have to think of it this way: while people are waiting for this so-called resistance zone to be turned into resistance, we're actually waiting for this to be broken. So while people are waiting to get long into this position here, we're actually waiting for price to break through their stop loss And this is what smart money is. We're waiting for the ordinary stop loss to be taken out before we can enter the market. And this is how we capitalize on big risk to rewards. Everybody has your own way of looking at the market. We look at the market very differently, and we need to follow our rules. If we don't follow our rules, then basically we're not sticking to our strategy. We're not sticking to our plan. Usually when price is making higher highs and higher lows, we're basically waiting for price to come back into our zone to enter. But first of all, how do we identify our zones? How do we identify when to buy or when to sell, right? Well, before we even do that, we need to actually identify market structure. And market structure is going to be basically your guidance into the market and how you look at and interpret this market. So for instance, let's say we have a trend to the upside. A normal trader would draw a trend line down here and up here and wait for any sort of pullback for them to enter. So they would wait for this to be broken or this to be broken, and then they would wait on a pullback to enter. So we actually don't do this. All we need to do is figure out where market is shifting. So we got some rules that we need to follow. And if we violate these rules, then basically we're violating our plan. Now the first step in identifying market structure is basically looking at the high and low. So the first thing to identify in market structure is the last high and low. So if we go ahead and do this again, and let's say we have a trend to the upside, price goes back down and does something like this. So what does this tell us? So the first thing this tells us is that this was the previous low, this was the previous high, but now because we had actually broken this high, right, we now have a new structure. And this low is no longer the low of that range. So let's do this again. So we have the last high taken out and a candle closes above, which we have candle closing above. So this right here identifies a bullish shift in market structure. We also have the impulse move right here, which also confirms that there is a strong intention of pushing the market to the upside. Now, retail traders are not involved in moving the price to the upside. So whoever impulsively moved price to the upside is most likely going to be banks or hedge funds. So now that we have a break of structure, our newly created range would be, this is the new low and this is the new high. Simply because we had broken the previous high, which created our new range. We were trading in a very small range, which was this one here and this one here. So basically, before this impulse move, let's imagine this impulse move never happened, we were in this range right here. However, after this was broken, we've changed range, and now we need to identify how we can trade within this newly created range. The same rules apply for a downtrending market, and we had a previous low which was at this bottom, and this was our old range that we were trading in. So now that we have a range that was broken previously, we now have a new created range, and we don't usually know this is our low until we get the low. Don't try to chase the low. It's always gonna be there when it's there. So now that we have identified market structure, we now need to know how we can use market structure to our advantage and how we can use market structure to enter our trades. Now when it comes to supply and demand, POIs, cluster zones, whatever you want to call it, it's all the same thing. And really we're all on the same mission. The thing about, finding bearish zones or buy zones, you really need to know how market structure works. And if you don't have an idea of how market structure works, then really you cannot find any of those zones. And this is why you need to find out market structure first. What we're going to be showing you today is going to be the very simple way of looking at supply and demand zones. It's not going to be too refined. This is one of the most important parts of your trading, and this needs to be very refined. So the more that we spend time showing you how we do this, the better that your eyes are going to be able to see it. What we're showing you is the basic outlooks when it comes to POI zones. So let's say we have a uptrending market, And as we have identified, this is our shift in structure, which happened to be to the upside. We have another shift in structure to the upside here. So how do we capitalize on this? Is where we use cluster zones and POIs, and they're basically the same thing. So when it comes to finding your POI, all you need to do is figure out where is the last candle that had the impulsive move to the upside that had broken previous high. So how do we mark out our cluster zones? Well, all we do is we need to figure out where is the impulse move, and this is our impulse move that we have discussed that had broken this structure. Because this impulse move had broken this structure, this means that there is a good chance that there is banks that are pushing price to the upside, because there needs to be aggressive buyers or sellers for the market to be able to retrace back to those levels. Now that we had broken this structure, we need to find out the origin of the move that had broken this structure, and in this case it is the move down here. Usually the POI zones or cluster zones, they're always going to be at the bottom of our structure, and they're usually going to be the red candle before the green candle in this case, because we had broken this structure. If we're looking at bearish cluster zones or bearish POIs, then we'd be taking the opposite of what we're doing here. So now this zone here becomes our cluster zone, our bullish cluster zone, or buy pressure, or POI, or supply and demand, whatever you want to call it. The main point is we're trying to wait for price to come back to this zone for us to enter the market. Now imagine if you enter the market here, where yeah, this can make sense, but are you really being safe? Are you being safe right now? Are you playing risk to reward? I don't think so, because by you entering here, I mean, you still have all those ways down here where you can enter here, it could take you out, take your stop loss, it could go down here, and you could have been out of this trade already, like it's done for you. But for us, we're just getting in. And the thing you have to understand about smart money is that you don't force it. We're not creating price. We're not saying just because price had broken this zone, this structure here,
Price has to come down here. It needs to come down here for us to enter the market. This has to happen.
a lot of people are like robots. They see a shifting structure. Oh my god, yeah, a POI. Oh yeah, a POI. Oh yeah, a POI. Just fucking robots. This is not how we trade. When it comes to trading, you have to be back testing everything that you see constantly. There is no this is breakup structure, automatically POI, enter. That's not how it works. We're going to be showing you examples and telling you why certain POIs don't work and why some do work, and it all comes down to how patient you are. So in this case, like we said, we're not creating price, we're reacting to price. So we're not saying price needs to come down here for us to enter. We're saying this is where we want to enter. It doesn't have to come down here. Now if let's say price did something like this and our entry is down here, somewhere here, and price just took off, then all right, so be it. It took off. It doesn't matter. We would have been so much safer doing this than buying at higher prices. Let's say we have a shifting structure here and we get another shifting structure here, and this case this always happens, to be honest, where price doesn't always come down here. It does something like this where it has a shifting structure and then another shifting structure, and now we have two different cluster zones where we can look to enter from. And this is when you should not act like a robot, because most of smart money traders are taught to be like robots, where you see a breakup structure, boom, that's it, you enter from that POI that's that just happened there. Just their mindset is totally before we even get to the second part of our introduction to cluster zones, we're not even gonna start even refining our zones yet. We're just gonna start filtering out the noise. So while many smart money concept traders like to refine their entry and make it more complicated than it already is and add more noise to it, we actually like to filter out the noise before we even do that. And there is many ways that you can do it, but one of the ways is we're going to be sharing with you today. And I want you to pay attention to the rules that we have just updated here, and this is how we're going to go about filtering out the noise. Now when it comes to smart money trading, you have to understand there is a lot of cluster zones. So meaning, while we have a cluster zone here, We also have a cluster zone here, and maybe another one here, and maybe another one here. So there is a lot of cluster zones on the way. And if you're a robotic smart money trader, then you're going to be taking entries on literally every cluster zone. And with the new hype around smart money and the concept and all that, there's a lot of new goofy wannabe traders that act like they trade, but they don't actually trade. And people that actually trade can spot those people, but the people that are new to trading, is going to be very hard for those people to get out of that. While there is 4-hour clusters, there is 1-hour clusters, there is 15 and 5 and down to 1 minute. You will see people trading off of those zones all the time. Everybody has their own way of trading, and yes, you can trade off those zones. Price can literally do something like this and then drop here and then do this. It could do something like that, and then once it gets to our 4-hour cluster zone, it can have a bigger reaction, but then it could also drop down again and then go back up, tapping into our lower zone. So this is what I mean. When it comes to cluster zones, they all work, but you have to realize what time frame you're playing in. If you're in a higher time frame, everything is going to be stronger. Everything is going to have more confluence. Higher time frame beats smaller time frame, but smaller time frame is fractal, filtering out the noise. You don't want to be involved in every single cluster zone. You do not want to be doing that. Matter of fact, you do not want to be involved in the market. You want to be in and out of the market as quick as you can. You don't want to have trades open, because the more that you open trades, the more that you enter trades, the longer that you are in a trade, the more that you're putting account at risk. Every time you open a trade, your account is at risk. Every time a trade is running, your account is actively at risk. While we may not have a trade every day, right? Because if we trade smaller time frames, we're going to have a trade literally every hour, every minute, every 15 minutes, every 30. Yes, that's true. That's possible. And if you're a scalper, that might be the way for you. But cluster zones. The next thing I want to touch upon is how we refine our entry. Now, as you can see right here, this is too big of a zone. We can't enter off a 40 pip zone. So what we can do is we can refine this down to a smaller zone, which would be a 1-hour cluster zone, and we can use that as the entry. Now we can also refine this one down to even a smaller zone, maybe to a 15 minute cluster zone, and use that as an entry, right? And this is all happening inside of this 4-hour cluster zone. So whatever is happening inside of this 4-hour cluster zone is going to be backed up by this 4-hour cluster zone. But the more that we have of those smaller, cluster zones, the more we're going to be complicating our entry. The more that you complicate your entry, the more that you're going to be looking for things before you enter. And that's not how it always happens. The banks, when it comes to institutions are going to be like,
okay, yeah, let's bring price down, and then we'll just have a break of structure, and then we'll have another break of structure, and then we'll go back.
It sounds so fucking stupid. Banks don't do that shit, okay? Yeah, sometimes they do, but that doesn't always fucking happen, okay? People who sell this type of shit are fucking stupid. I'm sorry to say this. Yes, we can have those entries where price can come down and have a shifted structure and another shifted structure, and then we can have another zone in here which we can use as the entry up, and we can have another zone here which we can have the entry up. Now this all happens from a fractal perspective, and sometimes price doesn't do that. It just does this. This is why the more that you refine your zone, the more that you're going to confuse yourself. And this is why waiting for such confirmation like shift of structure, it's going to be good, but it's not going to be always there, and it's never going to always be there. Matter of fact, people like to enter the trades after they see some sort of shift in structure, but actually even when sometimes shift in structure happens, price goes down. Why does this happen? Because like I said, when price reaches a cluster zone, it will react to that cluster zone, and then it will go to the next cluster zone. What I mean by this is price likes to mitigate all cluster zones, like we mentioned here. Price likes to mitigate every cluster zone. It doesn't matter. But smart money robots get confused by this. So price can literally react to this 4-hour zone here, meaning price could come down to the zone here at the 4-hour zone and then drop once again to the 1-hour zone, drop once again to the 15-minute zone, and this is basically our confirmation entry. Now for us, we have a very different way of entering the market. Yes, we can wait for a shift in structure in our, for our zone. Yes, we can do that for a entry, but that is the last thing we're paying attention to. We actually use professional tools to enter the market. If you guys would like to see a video about how we enter the market, let us know in the comment section below and we'll get to that. But again, if we share too much of our ideas and tools, then most likely some guru is gonna find it, or some wannabe trader is gonna find our information and add it to their course and resell it. So it's not your guys' fault, it's pretty much the guru's fault. Like, the reason why we can't post much information, because literally there's people there, they're just waiting for this information to go and resell it. So for now, I want you guys to focus on only daily cluster zones and 4-hour zones. You want to take cluster zones from daily and refine it to the 4-hour and get rid of the daily. So meaning, if this was a daily cluster zone right here, you would find it on the daily, and then once you find that on the daily, and then you go down and find a 4-hour cluster zone, then you get rid of the daily, and this is your new 4-hour cluster zone. You can use that to refine it to the 1-hour, but I think that should be your limit for now. The more that you get advanced into this, that's when you can start diving into smaller time frames, but never dive into any smaller time frames unless it's inside of a bigger, higher time frame zone. And always be mindful that while yes, there is a zone here, so price can come down here, give us a maybe 40-50 intraday trade, but at the end, the ultimate goal is to go down to the maybe 1-hour zone, give us another intraday trade, and depending on how you manage your risk and how to do all that, then you could be in or out of this trade when it goes down here for you to get into the next buy opportunity. So you have to keep in mind that you can't be a robotic smart money trader. While the majority of the people are promoting that style of trading where it's like you see something, you do it, you see something, you do it, it's just very stupid. That's not how the market works. Those are the people that you need to stay away from. People that show you trades on a replay system, like they go on their replay system, and I can go on my replay system too, and I can go look for past trades that happen, and I could, hey, let me refine, yeah, replay this. Okay, so you see this happen because of this. But what they don't tell you is that this is replay system, and they already saw this fucking setup happen. So be careful from those people. Be very careful. And this is only our first, video introduction to cluster zones. We can make more videos, going into more details on how we view cluster zones. Remember, this is very basic stuff that we're showing you here. We're showing you like maybe 0.5% of what we show to our members in our mentorship. Alright, so now we're going to actually show you an example from how we do this. So basically, as you can see right here, this is a cluster zone from a 4-hour refined down, and we have it coming all the way from here. We're not going to go back because you already know this is a cluster zone. We see that price had actually tapped into this cluster zone and we started going up. So this is the first mitigation to our cluster zone. We started going up, so this was our first buy entry here, and we managed this trade all the way thinking maybe we're going to be exiting here. So this was our selling pressure, so this is where we exited. So this was our first mitigation. Now we're waiting for the second mitigation on this cluster zone here. As you can see, this is a cluster zone as well. The reason why we have labeled this as a small buy opportunity, because this cluster zone is not as high time frame and not as strong as this one. So while we could enter on this trade here, we have to be mindful that this is most likely an intraday trade, and we want to treat it as one. Even if it's not, we want to treat it as one. So this is our intraday, small buy opportunity zone. This is where we want to be actually buying and holding. And instead of actually, showing you the replay system like most of people do, where they show you a replay, trade where they know already the result of it, we're gonna actually show you a before and after. where, you know, this is what we wanted to do. So this is the cluster zone right here. You see price tap into this first cluster zone right here, gives us a 1500 pip intraday, almost a 1500 off of this small buy opportunity, depending on how you managed it, and depending if you're using our intraday strategies, then you would be perfect, because you would be out of this trade by the time it goes down here. Once price taps into our, you know, real discount zone, this is when we actually buy with the intention of hold. We're targeting this selling zone here, which used as our first target. As you can see, price taps into our first zone at our first target, and goes to our next selling zone, which we had made in our next analysis. If you guys like to see more episodes of our educational free course, please let us know in the comment section below and leave a like. Until next time, take it easy.